What is going on, everybody? It is February 27th, 2024, daily log episode of NQ, live stream review. If you guys were in attendance today of the live stream, let me know in the comments below. I think it was a great learning lesson. For those who were there and present, even if you're able to watch it in the aftermath, let me know in the comments. I'm curious to see. I know this isn't going to be a direct reflection, but if you don't watch the live streams live and whether you watch them after, I'm curious to see the numbers and the views and the correlation. It would be interesting study to see. So let me know if you watched it after the live stream or not present. Nothing wrong with it. I'm just curious. But overall today, I'm so happy. I can't express the feeling. The only word I can really find is just being proud. I mean, that's it. I'm so proud of myself. I'm so proud that I haven't done anything in the last 2 days. I haven't touched price. I haven't done anything. I haven't taken a single trade this week. I mean, think about that. Like, it's such a powerful feeling. And the reason I'm proud is because there was many times in the past where I would have taken so many trades in the last 2 days and messed myself up mentally trying to do something in here. And I'm so happy that now through pain and through knowledge and through experience that I'm able to see this and just elect to not trade it. And it's such a liberating feeling. And I wish that all of you eventually get to that point. If you are and you stayed out of the market, congratulations. Give yourself a pat on the back. It's an amazing feeling. I don't care what anybody else says. I don't care if they made millions of dollars in the last 2 days. To me and my rule set and the way I view price, I'm very happy staying out of it. It's very, very cool, man. So we'll see what tomorrow provides, but as far as where we're at currently, we're still residing inside of this daily inefficiency here. So today's closure didn't give me really any evidence towards what price could be doing. Gun in my head, I know I say this a lot, and it may be annoying, but I have to say it because I would like to make a decision. It forces me to say something. I would elect to see higher prices than here. That's ultimately what I'd like to see. Weekly time frame, I think we can expand towards the previous week high. That would be cool to see overall. If you look at last week, this is a good indication of a quick gem. What is this candle? What is this candle here? This is what we would call an outside day or an outside week. What does that mean is you're taking out the previous week. This can be used on the daily time frame as well, but you're taking out an outside day or an outside candle is when you're taking out a previous week low and a previous week high. And if you look at the daily chart, if you're taking out a previous day high and a previous day low, that's an outside day. And what does that indicate towards us? That sometimes the candle after can go into consolidation, what we have been seeing, right? So if you see that on a daily candle, you can anticipate price being in consolidation or very difficult to trade in because you've taken out both sides of the board, essentially. And then what's an inside day? An inside day looks like, let me see if I can find an example, but it's when you don't take out the previous day high or the previous day low. You're just sitting basically within the previous day high or the previous day low. So anytime you see something like that, I'm spotting it right here. So this is an inside day. Do you see how we didn't take out a previous day low or a previous day high? Typically the day following or the day after, you can see an explosive price movement. And you can see, not directly, it's not always the day after, it can be, but typically following that, you can see price moves in a decently good movement, right? So just a little tip, a little education while I'm sitting here. As far as tomorrow, like I said, I'm going to see if we can look for higher prices. If not, I'll just adjust. There's not enough information for me to even make a decision. Go back to my weekly forecast. While I'm sitting here and looking at price, go back to my weekly forecast and really listen to what I was saying, because I predicted that we're probably going to be inside of consolidation the first 2 to 3 days of the week. And how do I know that? Well, if you've had a very large range expansion type of week the prior before, especially coming off of a Thursday and Friday and rolling into a Monday, you can anticipate that. I'm not anticipating large range movements. I'm not anticipating price to just be wild and moving in all sorts of manners and fashions. I'm expecting it to be inside of consolidation. And it's exactly what unfolded. So it's very cool that not only are you able to stay out of consolidational points in price, but you're able to predict it and see it from a very far ways away. And it doesn't catch you off guard. You're not blindsided by it. You've already been prepared for it. You're ready for it. And for me, it's such a cool thing to know. And I had to learn most of this through the hard way. And if you're like me and who's very stubborn and you just have to learn the hard way, unfortunately, you're going to have to learn through pain. And that's what I had to do. I'm a very stubborn person. I want it my way. And if I don't get it, I have to learn through the most difficult way. I don't learn very easily. So price had to hit me over the head for years until I was like, oh, yeah, I should probably stop doing that. I should stop trading in very low probability conditions. So hopefully you guys were able to pick that up this week and over the weekly forecast. And these type of weeks are boring. They seem like you're not learning anything. It seems like you're not making any progress, but you are, because these type of conditions are going to repeat throughout the rest of your career. And if you're not able to predict them, you're not able to stay out of them, they're going to ultimately be the death of you, the death of your career. If you can't figure out how to stay out of these conditions and not trade them and not be able to predict them, I mean, it's you're not going to make it very far. I'll put it that lightly. Because the last 2 days I've been able to save myself capital and mental capital. I haven't been fighting in here. I haven't been trying to go up and down and doing everything possible that everybody else has been doing. I've been doing nothing. It's the smartest decision you could possibly make. I don't care what anybody else says. To me, it's the best move on the chessboard. When I look at the pieces and I look at the board, it's the best move. So in here, I was annotating this morning, why was it low probability? Because you have buy side liquidity resting above us, and you have sell side liquidity resting beneath price in here. And we're basically ranging about in the equilibrium. So from that high down to low, we're sitting at equilibrium basically at the open. So you could just flip a coin and say, all right, well, price is going here, it's going there. And I was talking about how a lot of times the consolidation, it can trip a lot of people up because it will go near a sell side or buy side liquidity pool. It will go near it and then revert. And you saw that today where off the open, a lot of people could have chased the short. Price reverted, went higher. Everybody thought it was going higher. Okay, let's chase the longs. Get stopped out long. Okay, price drops lower. People try to chase longs or shorts again. Possibly gotten stopped out. It ultimately took out sell side liquidity, and then we immediately reverted. So I was talking about the scenario. If we do take out one of the sides of liquidity, I would have to see, all right, well, does it want to continue after taking out the sell side or buy side liquidity pool, or is it immediately going to revert? And why would I be thinking that? Well, if there's sell side and buy side on both sides, if you take out one side, it's more than likely going to reverse and try to tag the other side. It's classic accumulation manipulation distribution. So in here, what I'd be looking at is going in tomorrow. Unfortunately, I believe this is going to happen overnight. It's just the way price has been acting recently. And it's probably going to happen, I would say, before the silver bullet, which is fine. I don't fear missing moves, but it's just a really nice, clean liquidity pool. It's a really easy target. Like these highs here are probably going to get cleaned up by tomorrow. So when I'm looking at the daily time frame, I can't get a super clear narrative, but when I look at the lower time frames, I can see where the liquidity is. I can see where it's resting. So I'm electing to believe that 1865 is going to be the draw tomorrow. What would be the higher targets? Well, I'm not going to look at the immediate high. I'm going to look at, what have we talked about? The wick, right? We're going to mark out the CE of that wick. We're going to extend it out to our right, and that would be the second target. If price gets above the buy side, I'm not immediately going towards that high. I'm looking at where's the nearest target for me. Will it be the CE of this wick in here? And it'd actually be the close in here as well. So those two levels there, that is what? Your rejection block. And it's also a very large wick, which wicks will act as gaps. So it's the reason why I'm marking out the 50%. Those will be my levels and draws on liquidity. If we get above the 50%, then ultimately, yes, I'd be looking at the high here that was printed at the all-time high, and I'd be seeing if price would want to gravitate towards that. You can't have an overzealous bias, especially with a wick like this, rejection block. You want to just inch towards it. You want to inch through it, see how price reacts, revolves around it. If you can keep getting that steady long pressure, you could say pressure, but higher prices, then you can look for the all-time high to be traded to. For now, we're going to focus on 1865 tomorrow, 1863 approximately. So I don't really want to go over price this morning. There's nothing in here. It's meaningless to me. I talked about this over and over today. It's a very common phrase of mine that today a lot of the things meant nothing to me. Every single fluctuation, people were trying to figure out what it means. Sometimes it means nothing. Like, I hope that made sense to all of you, why I kept saying that over and over again. It means nothing to me because every single fluctuation inside of a consolidation is not significant to me. It means nothing to me because there's no significance. There's nothing behind it, right? Like when price dropped lower in here, then price traded higher. People saw for rally gaps. They're trying to chase the longs. They're trying to get the buy side tagged. All of it is very low probability. If I was to put it on a grading sheet and try to grade it, I would grade this an F. It would be in an F quality position today. Even ICT, in our private group, he talked about trading. He was trading in this condition today, which I don't know why he was. He's ICT, he's himself, but he gave back half of his profits he made from another trade, which was in crude oil. He gave half of that back inside of these conditions. So think about that. If our own mentor can't even trade inside of these conditions, what makes you think that you could trade in this? What makes you so confident that you can do that? With me, with 6 years of experience, I can't even do it. So the best, smartest move is to do nothing. And most of you can't sit still. You can't just be patient enough to wait for this. It's such a smart move, man. Again, I try to emphasize it a lot for the people that just they're so stubborn like me that can't get it through their head. I'm trying to push it into their skull that you should not be trading in this. After we took out sell side liquidity here, that was the relative equal lows. Price displaced higher, got above this old SIBI, turns into what? An inversion. Price drops down into it, and then price reverts, trades away from it. Even though the delivery in here was really, really quick, which it's not bad. I didn't trade any of this. I was not a part of it. I didn't really peep the PM session. But just in hindsight, the only decent trade was maybe that one down there. It's a little bit more risky, but if you're into that, it's a decent trade. I mean, this is the other one that I particularly would have been a fan of because if you look at a 5-minute time frame, we'll go back out to here. There's a 5-minute fair value gap in the same area, basic influence. We IOFED it, price rallies up. Then we ultimately didn't even tag the buy side. We just generated or engineered more buy side. So trying to get for that buy side liquidity pool, it would have been difficult, right? I mean, on the 1 minute, decent little run in here, about 30, 40 handles or so. If you're entering here, yeah, maybe 30 handles. Again, the price runs are so little. That's like, why even risk? Why risk my mental capital for that little of a run? On like a Thursday or tomorrow, I could have a 50, 70, 80 handle run and I have to do next to nothing. So again, I hope today was useful. I know it's boring. I know it's not the most fun. It's not what you thought you signed up for when you got into trading, but it is the cold, hard reality of it. And the best case scenario, like I've mentioned before, is to do nothing. So that's going to be it for today's video. I hope you guys enjoyed. Until tomorrow, I'll be live 15 minutes before the open. Until then, good luck and good trading, everybody. Be safe.